Hey, everybody. Welcome back to another edition of Coffee and Contracts. I am Rusty with Carr here in the most beautiful land in the world, Memphis, Tennessee. And I couldn't be more excited about today's episode as our CEO, our leader, Colin Carr, the founder of our company, is joining me today on the heels of our national meeting. And before this, Colin, we were talking a little bit about like what I took away from it. And the biggest thing is just you have built an incredible brand and company of people who are like-minded, want to succeed, but more importantly, want to see others succeed right alongside them. So kudos to you for that right off the jump. How are you, man?
I'm doing great, man. Thanks for the kind words. Thanks for having me.
Yeah, man. I just couldn't be more excited to talk through some important questions we have today. But before we get to all of that, I remember going through my interviewing process, and I talked to Jeff Drott, and I was already in, and then I talked to Mike, and we had a great conversation. And then my final interview was with you and Mike. And I just remember hanging up, and I called my girlfriend afterwards because she wanted to know how it went. And I was like, I don't know that I know what I'm doing, and I know I'll figure it out. I just know I want to work with those guys because just your passion for helping people who help people was very inspiring. Carr's model is exactly what I was looking for in making a career transition. So tell everybody a little bit about your background, how Carr was founded, and what led you that direction.
Yeah, I appreciate it, man. Yeah, I guess in first, what you do is very important. How you do it's very important. Why you do it's very important. But who you do it with is equally important. And I think that's a missing ingredient for a lot of companies and a lot of cultures. People say, culture trumps vision, culture trumps a lot of things. And so having the right people on the team that truly care about you, that want to see you succeed, that are committed to helping you succeed at the highest level in every endeavor area that you're willing to open up to, that's, I think, what makes Carr so unique. So
absolutely.
My story is all I've ever done is real estate. So I got out of high school. I jumped into property management right away. I wanted to start working right away. I started managing my first apartment complex when I was 19. Progressed in that area for a couple of years, got to where I had a couple hundred units, multiple buildings, mid-rise, high-rise properties. And then I got my broker's license when I was 22. And I started doing a lot of large national retailers like Walmart, Wendy's, Blockbuster, coffee franchise, automotive franchise. And I enjoyed doing those deals, but I got a taste for working with individual business owners, and just something felt more impactful. Like I remember signing leases like with owners of companies, small businesses, and they were really, really grateful and appreciative for what we were able to do for them. And, not that the national retailers weren't, but it was just one of 70 locations they were opening that year. And you were really just one of 70 brokers they were working with nationwide. So there wasn't much relational equity there. There wasn't much appreciation. And so I just started focusing more and more on individual, like office and industrial type users. And one day a client of mine bought a medical building and asked me to lease it. So I did. And what I found out very quickly was that literally 9 out of 10 doctors that showed up inquiring about a space, asking about availability, or getting ready to do a lease renewal had no representation. And so what was just totally contrary is in retail, 99 out of 100 retailers had representation. Like in large office deals, sophisticated office, like tech type companies, Fortune 500 companies, everyone has a broker. And so I'm listing this medical building and I'm getting calls, and it's Dr. So-and-so, an office manager for Dr. So-and-so. And it just was eye-opening to me. I'm like, nobody has representation here. And then we did a number of deals with healthcare providers. While I was on the landlord side, they were on the tenant side. They had no representation. And what they negotiated was pitiful. Like, I mean, it was ridiculous how bad the negotiations were in their favor, or how egregious they were in the landlord's favor. So I had a number of those happen, picked up more medical buildings. And then, to make a long story short, I had a couple of deals that happened within literally a short, 7-week period of time, where we were doing lease renewals specifically for healthcare providers. I'm on the landlord side, doctors are representing themselves. And I had a couple of deals in a row where the doctors literally overpaid or lost like $500,000, $600,000, $700,000. Like, it was insane how above market these lease rates were. No concessions, no discounts. Like, they were missing some of the most obvious things you negotiate. And they had no clue. These guys signed off on these deals that were just detrimental to their practice, to where they were, then personally, they were losing $50,000 to $70,000 personally that would have just gone right into their pocket each year. And after a couple of those deals, I just realized it's not really a fair fight. Like, it's fair from the sense that no one forced them to sign the lease. No one forced them to do a deal. They did it of their own free will. But there was 20 people that would have taken my place on the listing side as a landlord agent, but there was nobody doing the tenant buyer side. So I made the decision within a short period of time to go healthcare only, tenant buyer only. We launched Carr at the very beginning of 2009, and we're now in our 18th year, and it's been a lot of fun. So, I mean, that's kind of that's the Cliff Notes version.
Yeah, absolutely. And that's kind of a great kind of transition into where I want to start today. I can attest, I went to grad school. I'm a doctor of physical therapy by trade, so I have a good medical background. I got no business training. I remember the first time I was handed a P&L and told to analyze it and look for places we could cut costs and ways we could be more efficient. It might have well been like some Greek parchment paper because I had no idea what I was looking at truly. And so what does that look like for you or for us on the tenant buyer side as an advisor for these doctors? Like, how can we kind of bridge that gap as you spoke about earlier?
Well, I think it starts for the doctors realizing that they're not trained in that area, just like we're not trained. So I don't try to do my own healthcare. They shouldn't try to do their own commercial real estate. I could pull my own tooth, but it's probably not the best idea. I could self-diagnose myself. I could tell someone to like stand on my back and jump, but that's probably not the best way to get an adjustment. And so, like, if you use a healthcare analogy, everyone's like, "Oh, that's obvious." But you get into the commercial real estate realm where there's literally hundreds of thousands of dollars, $500,000, $1 million on the line for these practices, and just because they can say send me an offer, or they can submit quote a counter offer, or they can say send me the lease contract, just because you can do that doesn't mean that that's going to get you the right result. And so this concept, as far as like, well, like, I can negotiate, you can certainly negotiate, anyone can negotiate. The question is, did you just lose $400,000? Did you just miss out on $250,000 in concessions? Did you just waste 30 to 40 hours of your valuable time? Again, I can pull my own tooth, but it's probably not going to put me in the best position to succeed in the future for oral health. So again, pretty obvious, but that's what it comes down to. So, for us, it's just a matter of helping the healthcare community realize what's available. Landlords are masters at making them feel like no one's getting a better deal than you. We've never done this before for anyone. You're paying the lowest lease rate. You can't do this. Our lender said no to this question. And they're just masters at positioning anything that the doctor asks for as like no or sorry. And meanwhile, the doctors don't understand how the game's played. They don't understand posture. They don't have multiple properties teed up. They're usually pushed into a corner on one property, or they don't know how to relocate properly or how to negotiate properly. And so for us, the whole idea is let us handle it for you. Let us represent you. Let us protect your interests. You still have the final say on everything. But we're going to help level the playing field, and we're not going to allow a landlord to tell us something that's not true and believe it. We're going to cut through, just the rhetoric and the lies, honestly, and we're going to help the doctor realize, like, this is how the game's played. This is what's available to you. If this landlord won't play ball, we've got 3 or 4 other ones that will, and we have an option to purchase, and we have an option to relocate, and we have office versus retail. Those type of things, that's what puts you in a position to win. And when you show a doctor what's available and how to play the game, it's a very simple yes, because they understand there's a lot of money in the line, and they want to capture as much of that money as possible.
Absolutely. And you kind of hinted at this a minute ago. You mentioned posture. That's all this is trying to create posture and leverage, and having the right representation can educate you and help you with that. Talk a little bit about what posture is, or maybe some new docs out there or new business owners that don't quite understand what that is.
Yeah, posture in its simplest form means that you have other options. Okay, so we can say this way: the strength of your posture is predicated upon you having other options. If you have no other options in your negotiation, you are down to a begging situation or a bluffing situation. If you have no other option, you have to transact in that property, or no matter what happens, you're going to sign that lease renewal. You are literally just begging the landlord not to do something that they're going to probably do anyways. However, if you have the ability to say no to a landlord, if you have the ability to pass on a deal or pass on an option to purchase, then that gives you strength. That gives you a strategy. And when one landlord won't cooperate, then you just simply move on to the next one. Let me say it this way: if you've ever been in a negotiation before and you've gotten emotional, what you've shown is you don't have a very good posture, and you don't have other viable options. Because if you have multiple options that are viable, there's no reason to get emotional. There's no reason to get upset. If one landlord isn't willing to do what you need them to do, then you simply pass that landlord and you go to one of the other like 2, 3, or 4 properties you're looking at, and then you spend time working on those deals. And so it's no different than anything else that you're going to purchase or sell. If someone wants it, great. If they don't, great. But the only way that you get upset or you get flustered is if you don't have anyone else like that's there and you're just hoping or begging someone to do a deal with you. That puts you in a weakened position. And I'd say this, most landlords assume the doctors don't know what they're doing. They assume they don't have representation. They assume that they don't have the ability to really put together a strong negotiation. And they're going to enter into the discussion with those things in mind. And it's going to put the doctor in a compromised position.
Yeah. I mean, I had that conversation literally this morning as of this recording. I picked up a client of a big group here in Memphis, and I called the landlord, and it ended up speaking directly to the landlord. And they were like, oh, they've been in that building for 12, 15 years. They've never had representation. And it's like, yeah, well, they understood what they needed. They understand that they didn't know what they used to, they know what they don't know now. And so they hired me to help them with this deal. And we are going to look at other properties, and came back and said, I understand that. That's great. But know that this is healthcare property and it's going to be a different rate. And I said, I can appreciate that, but we're going to market to find out exactly what these spaces are going for and create that posture to where then we'll know maybe he is, maybe it is corrected. This is what it is. I have a feeling he's a bit expensive, but we'll see kind of as we create that posture. And that's where a good tenant buyer rep comes in handy. You've been on the other side of that table where you've been on the landlord's side. When you see a doc come or somebody come, you kind of hinted at this earlier with some of your dealings, but when you see somebody come in unrepresented as a landlord listing agent, what's the first thoughts to go through your mind, or how are you setting up that deal for the landlord?
So the first thing you're going to do, you're going to try to accommodate them. You're going to try to be the only person that they need to talk to. You're not going to make it difficult on them. You're not going to frustrate them, because that's going to push them into a place where they want to go and get their own representation. So landlord agents are masters at trying to accommodate, facilitate. Can I help you? Can I get you in the space? Can I get you a floor plan? Can I send you a proposal? And a lot of doctors and providers don't realize this person has a legal obligation to help their client make as much money as possible, which means help you pay as much as possible. So they're going to help facilitate it. And then they're just going to do things. They're going to say things like, this is the best we can offer, or unfortunately, under the circumstances, there's no other movement on this deal, or the lender won't allow blank. And so the landlords just say, go tell them this, or say this, or do that. They pass that information on. And again, most doctors don't have other options. They don't have representation. They don't know the market. They don't really know if it's a good, average, or bad deal. So after they pushed 3 or 4 times and gotten virtually nowhere, or we got maybe some very minimal concessions, they eventually just roll over and do the deal. And so the landlords of these properties are counting on the doctors pushing, asking for things. They're fine with that, but they're going to give them incremental wins. They're going to say, okay, I can't do that. I can give you a month of free rent, but that's really pushing me. Or I can give you $10 in TI for new carpet and paint. That's the most I've ever done. What they don't realize, if it was done properly, you could have gotten 40 or 50 square foot of TI. You got a check for 30 grand. You could have gotten a check for 150 grand. You got, a month free. You could have received 5 months free. You've got these operating expenses that just keep ratcheting up every year. We could have capped them or done something specific to help limit how much the landlord can continue to reimburse or charge you. You're responsible for the HVAC if you're in a retail property. We could have included a new HVAC system as part of the renegotiation in your retail property, or whatever it might be. So there's just all these little things that are out there. You've got an assignability clause if you want to sell your practice, but it's not one that's actually going to help you sell it, because when you go to sell your practice, you got the wrong terminology. So they gave you a clause that you think is going to help you, but because the language is not in your favor, it actually doesn't work and doesn't do what you think it's going to do. And so there's just a number of things that are economic. There's many things that are business related. And the whole idea is simply this: you get one crack at this thing every 5, 7, or 10 years. You can't get a mulligan or a redo once that contract's signed. You are locked and loaded. And so don't lose $250,000 or $500,000 or $750,000 because you, quote, don't know what to do, or don't know who to hire, or don't have time, or it's inconvenient. Like, you got to stop and find the right person, let them protect you, and then save $500,000.
Yeah, absolutely. And so kind of the overarching theme here as we get into the bulk of the episode is just strategy, having the right strategy, having the right representation. can help a doc with long-term planning, kind of that long-term vision casting, right? So what are some ways, like a lot of times I know in real estate, when you're looking for a house, what are you looking for? You're looking for location, 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 right? You're trying to find the best spot, best neighborhoods, that kind of stuff. That's the case in a lot of what we do, but it's not just about the location. There's so many other things to go into a commercial lease, commercial transaction. How can you get your clients to stop thinking about it as truly transactional or location and more about strategy for the long-term health of your business?
Yeah, it's a great question. When it comes to residential, it's where you live. There's a lot more tied to it. It's where you raise a family. It's things like that. And so, when you find the right property, it's really what do you want to pay? Is it worth it to you? It's very arbitrary for the most part. But then it's really just what's the price? That's it. I mean, sure, you might do an inspection. You might ask for like a new air conditioning unit or some roof to be fixed. But for the most part, you're going in there, finding the property, and then it's just price only. If it's a purchase in commercial real estate, there's some similarities there. But if you get into a lease, and 19 out of 20 doctors lease their office space nationwide, believe it or not, it's certainly, you might know plenty of people that own, but statistically, it's literally like less than 5% own the real estate. But you get into a lease situation, it's not just what's the lease rate, it's what are the annual increases and what are the discounts and how much free build out period you get and how much free rent you get when you open. How much money will the landlord put into the space in the form of a tenant improvement or renovation allowance? Do you have an exclusive agreement to where your top competitor can't show up in the same property? Do you have the ability to sell your practice with right terminology? Concepts like that. So there's a lot more at stake. There's a lot more economics. Again, when you purchase, it's one and done. When you lease, you got this, like, where am I going to be in 5, 7, or 10 years concept to figure out. Do the annual increases outpace inflation? Where are you going to end up in 10 years after you've had your rent bumped 9 times? Are you going to end up like literally like 18% above market? Those are the things you have to figure out. So there's all sorts of levers and buttons you can pull and push, and you just got to figure out how to make the best deal out of what you have.
Yeah, and that's a great comparison between residential and commercial. I think we need to talk about with commercial. It's different than residential because when you put in an offer on a house in residential real estate, like that is a legally binding contract that if they agree, like that, then that's it. Like you've got to buy this house. You don't put in multiple bids unless you're trying to buy multiple houses. In commercial real estate, it's much more advantageous to be strategic and about your offering and looking at multiple properties, because then that's how you get the best deals and best rates. Because as you spoke about, Colin, there's a lot more that goes into these commercial leases than just purchasing a residential property. Yes, you may get an HVAC or a cleaning or the blinds to stay or the plantation shutters or whatever. But in a commercial real estate deal, if you're looking at multiple properties, you're also going to be able to get some of those assignment clauses, those rate escalation freezes, HVAC caps that you may not know is in the market without having multiple properties. And so having a strategy that you're looking at multiple properties is key to finding the best deal in a general vicinity. Maybe not necessarily like this specific one building, but like here in Memphis, for example, like East Memphis is a great growing part of the city, a lot of medical space here. Maybe East Memphis is where you want to be. You want to be close to Poplar, but you don't know what all is being offered in this area if you're not going to market and like negotiating on multiple properties. Is that fair?
Absolutely. And when you look at it, when it's a house, that's just kind of a one and done scenario. That person has one thing to sell. It's their house. When you get into commercial real estate, you get into these larger properties or landlords that have multiple units or multiple vacancies. It's a different consideration. They're thinking what I have to do to get this property leased for the next 10, 15, 20 years. And they're not going to give you their best terms unless they have a fear of losing the deal. If somebody showed up to your house to buy something, you put something on Craigslist and they said, I'm buying it no matter what, don't sell it. And they get there, when they get there, you're not going to cut the price in half. And they said they have to get in, they're not going to leave without it. It's that conflict. If the landlord's talking to a tenant and they have to lease the space, they have no other options. They don't have time. They ran out of time. The lease expires in a month. They don't have the money to move. The landlord has no motivation to arbitrarily discount the rent by $200,000 and lose $200,000 to that tenant. However, if they think they're going to lose that tenant and it will cost them $400,000 to release that space between vacancy time, leasing costs, new build out allowances, those things, will they give up $200,000 to save from losing $400,000? Yes, but they're not going to do that unless there's a fear of loss or a risk of losing something. And so, how do you create that fear of loss or the fact that your space might sit vacant for another 2 years if you don't get more aggressive. You can only do that through posture, by talking about multiple other offers you have, by having bona fide, legitimate deals that are offered from other lenders or sellers. And so you're not bluffing. You're not just making it up saying, well, we've got this over here. You can talk intelligently saying, look, our other 3 landlords are offering us 75 a square foot in TI. You're at 40. We like your property, but you're literally $35 a square foot below the other landlord. You're $150,000 lower than they are in TI, and you're not going to make the deal. So when landlords hear that type of information, they know that they're competing, and they know that other landlords are willing to do it. That's what gets landlords to move off of their initial offers and say, all right, I'm willing to work harder to make this deal. I'm willing to give up more of my profit to make this deal. It'll still be a deal that makes sense for them. If they'll still want to do it, they'll still be profitable. You're not forcing them into a bad deal, but they might make 11% of the deal versus like literally 37% or something crazy like that. So all you're doing is just leveling the playing field to where, that couple $100,000 that's at stake or in play, more of that goes into your pocket versus their pocket.
Yeah, exactly. And so that's a great transition as we talk about, I want to start like when leasing makes sense, because oftentimes when you're thinking about residentially, kind of going back to that, you're just kind of throwing away money if you're renting a house long term. Maybe that's your financial situation and what you can do, but it's always more advantageous to be giving yourself equity. In commercial real estate, like you said, most doctors, we said 19 out of 20 lease their own space. And so why is that often either a great place to start, or maybe B, more advantageous for a medical group?
Yeah, so the first reason that 19 out of 20 lease versus purchase is because that's the inventory. It's very expensive to build commercial properties. They require a significant amount of additional consideration as far as like building codes and so forth, elevators, like just the standards to build commercial are much higher than residential. And you can't, it just economies of scale. You can't build, little 2,000, 3,000 square foot office space is the way you can build a 2,000 or 2,000 square foot townhouse or a house. So inventory wise, there's literally like 20, 30, 40 times more properties for lease than there are for ownership. So that's number one. And then when you have ownership, you are competing with other people like retailers, like Chick-fil-A or Starbucks or Chase Bank. And so those guys in the commercial industry are going to be more prone, like an AutoZone, or those guys are going to be more prone to buy their real estate. So they're competing against you as well, too, for some of those like 3,000 to 10,000 foot properties. So inventory, as far as, leasing or zoning, there's 30, 40, 50 times more properties for lease than there are for every one that's available for sale. And then when they are available for sale, you've got a lot of other people that are not healthier that are looking at them. So that's the number one reason. The number two reason is that people's needs change. Like they need 3,000 feet now, and then they're going to need 5,000 feet in 5 years, or they want to be in this location now, but they want to be closer to a surgery center in 6 years. So they're going to do a 5-year lease and then move. And so the idea that your needs change, your square footage changes, you want to be, closer to a certain hospital system or referral sources, or maybe an area is up and coming and you want to move closer to that growth area. It just gives you flexibility. So, people say, well, yeah, I can buy and sell my house quickly too, but getting in and out of a commercial property is 10 times harder than getting out of a house. Like, believe it or not, there's just so much more that's there. So inventory, number one, flexibility, number two, and then just the financial side of it. Landlords are willing to pay significant money for long-term leases, especially for healthcare providers. So if you want free build-out period, if you want free rent upon opening, if you want large tenant improvement allowances, or you go to renew your lease and you've been in there for 10 years, you should be able to get enough money to almost fully renovate your space cosmetically in a lot of scenarios, and then make sure your lease rates market. So there's economic considerations too. 1 month security deposit versus a 20 or 25% down payment for a lot of doctors. Now, you and I know there are lenders that will do 0% down, 10% down, but typical loan, you're still going to put down 20% in a lot of scenarios. So, $5,000 versus $200,000 cash flow. Leasing is usually cheaper per month than purchasing is. So that's more cash flow and more, long-term strategy. So inventory, economics, flexibility, landlord contributions, those are the reasons that more people lease than purchase. But, long story short there for me, if you have the ability to purchase and there's a very good option to purchase, we always tell people to run the numbers, look at it, do a purchase versus lease comparison. And if the numbers work for you and are close, we're going to choose purchasing, as many times as it makes sense. And so for me, if it makes sense to purchase or you can afford it, I'm going to recommend purchasing as much as possible, because at that point, you've got an asset that'll be worth as much or more than your practice will be in 10, 15, 20 years. And a lot of times these are 15, 20-year notes. So you have this thing paid off in 15, 20 years. And so if you get a 2-for-1, the value of your practice plus an asset in the form of commercial real estate that's worth as much or more, that's fully paid off, I mean, that's a pretty lucrative place to find yourself in.
It is, and that's a very good long-term strategy for wealth building, right? If you can own a building, let's say that's your future, that's where you want to go, and you can occupy 30, 40%, which is common in commercial loans, right? You have to occupy a certain amount of the square footage in order to get approved for the building loan, but then you can use that other 60, 65% to pay your note, pay your mortgage, or help pay the mortgage on the building. Then you've got just in immediate cash flow. Like you said, you've got an asset that's going to be worth more than your practice in 10 or 15 years, and a great retirement plan, because you've got mailbox money right there, right? Where you're sitting there, you've got people paying you month to month for their rent. And then let's say you decide to scale back from your dental practice, but you still own the building, somebody else buys your practice, that's mailbox money coming right to you, which is a great long-term wealth building strategy.
Yeah, I mean, most people do a 15, 20-year note, as we mentioned. Most doctors, just if they pay off their practice loans early, they'll pay off their real estate loans early as well. And so if you pay your building off in 15, 20 years, and then you keep practicing, well, you can pay yourself, and that's income coming in. Or you sell your practice, you might hold the real estate. You might do a 10, 12, 15-year, lease with the person that buys your real estate, buys your practice. And you have a 10, 12, 15-year, lease with the person that bought your practice. That's going to pay you every month for the next, whatever the term is. So, and then maybe you decide to sell the real estate 10 years in or 7 years in or whatever it might be. So it gives you options. It gives you the ability to have an annuity or cash flow. And at the end of the day, it's a very lucrative investment.
So if you have a doctor that comes to you and says, Colin, I want to start this with this one practice, but my goal in the next 10 to 12 years to open 4 or more satellite locations, where does that conversation start? Do you look more for leasing? Do you encourage them more towards a purchasing option? Where do you typically start in that conversation?
Yeah, a lot of people that want to scale are going to choose to lease over purchasing, because it frees up more capital, and it allows them to borrow more money that's aimed at aimed towards the practice expansion or scaling versus the real estate. We do have lots of clients that do scale and they want to own the real estate every time. But I would tell you probably 3 out of 4 clients that are scaling, if not more, wanted to stick with leasing. They want the free rent during the build out. They want the free rent upon opening. They want the lower deposits for secure deposits. They want the higher cash flow because the rent's usually cheaper than a mortgage. And then they want to limit how much money they tie up in debt so that they can get more debt for scaling the practices. So it's a business philosophy or decision. Again, we do have some groups that all they do is want to own both real estate and a practice. But I'd say the majority of them will say, let me just lease, let me keep it simple. It's also faster that way for a lot of these guys too. They can sign a lease and they can move quicker in a lease scenario than they can if they have to go through the full due diligence on a purchase.
Sure. You talked earlier about paying off the practice loan. So let's focus on that for a minute, talking back about leasing. Like, you and I can speak to this. There is nothing more leverageable or enticing than a fully funded, paid off medical practice to get you the lending from the bank that you want for maybe your dream building to purchase, to build, which we'll talk about in a little bit. Why does lease term matter? We've talked about concessions, and that's kind of the obvious statement, right? The longer the lease, the more concessions. But when a client comes to us and they're like, I think I only want to do like a 5-year term to make sure this is going to work, why is that not always advantageous?
Yeah, the landlords are going to look at whatever the lease term is as the maximum time frame that they can allocate their return. So, someone says, I want to do like a 3-year lease. Well, the landlord can't give you 3 years worth of annual rent in the form of free rent, concessions, build-out allowances, and so forth, because there's nothing left over for them. Most landlords do finance like the tenant improvement allowance or even like the free rent periods. Like they'll actually finance those amounts of money. And so there's a cash flow, but it just, the question is, how many years worth of rent is the landlord giving you in the form of concessions, in the form of TI, free rent, et cetera? And so the longer term you give the landlord, the more time they have to recoup that initial investment or that capital that they put into the deal. So if you give a landlord a 10 or a 12-year lease, they can put in 3, 4, 5 years worth of rent into the deal because they've got an extra 5 or 7 years on a cash basis, but they're going to finance it. It just gives them more margin on a monthly basis where they invest a certain amount per month, but they're still getting a higher amount to where it still makes sense financially for them. So, it's like anything. If you had a house and someone showed up and they said, I want to do a 1 month lease and I want you to put in new carpet, and I want you to paint it and give me new appliances and then give me a month free, you'd be like, well, that's the dumbest thing I've ever heard in my life. Well, that's what doctors oftentimes ask landlords too. They'll say, I'll give you a 3-year lease, but I need 6 months to build out. I want 4 months free. And I want you to give me 50 grand here or 100 grand here. And the landlord's like, there's nothing left over for me. But if you give a 10-year lease, then they're like, yeah, you know what? That 3 years worth of rent value, I can give it to you because I've got enough margin or spread to make up that cost initially. And, it's a good rate of return. So it all gets down to rate of return for them, whether they pay cash for it, whether they finance it, how much money is left over after they put capital into it or they borrow it. And then what's the spread? And if there's a good enough spread for them, then they'll push further for the deal.
Yeah. And I think a savvy doctor and a savvy tenant rep thinks that way. It's like not us versus the landlord, but it's like, how can we get this deal done in the best way possible for us while also understanding like this is a transaction for the landlord. There has to be a little bit of give and take here. Like you can't walk in and expect, like you said, 6 to 8 months of free rent, 50 grand on a 3-year lease. But if you can offer some concessions back to the landlord, which is not necessarily our fiduciary responsibility, but as tenant brokers, we need to understand the art of the deal, as it were, to make sure that there is some give and take here. Then you're going to be much more successful, both as a tenant and as a tenant rep agent, where you're dealing with these landlords from a place of, hey, what can we do to get this deal done? More so than I'm going to walk here and clean house and I'm going to put my foot down on some places that may cost the deal in the long run.
Yeah, no, that's a really good point because you've got a couple different personalities that come into deals. You've got the one person who has no time, misses their renewal option, has 2 months left in the lease. You got the person that doesn't know what they're doing and just admits, I have no clue. I have no other properties. I can't move. This is the only property I want. You've got the guys that just show all their cards to the landlords instantly. And then you have the people that think they can do it. And then they are unrealistic and they over negotiate and they kill deals by being just ignorant to what's fair and not fair. And they'll say things like, well, you never know if you don't ask. And it's like, I can tell you a lot of things in life that I know without asking. Okay. Like if you ask a landlord to do a stupid deal where they're going to lose money and that makes no sense, they're going to walk away saying you're an idiot and I don't want to work with you. And so I see a lot of doctors that take a stab at themselves and they ask for things that are foolish or they over negotiate and they're pressing beyond the measure. So, and it's not hard to figure out, like, again, if you were selling your residential house and your house is worth, let's say $1 million and it's a seller's market and someone shows up and offers you $400,000 and they say, well, you never know if you don't ask, you would be like, yes, you do. Like that's, and that might seem like an over exaggeration, but it's amazing where sometimes doctors will show up and they'll start asking for things. And it's like, you've left no profit for the landlord whatsoever to where if they do your deal, they're going to lose money for the first 7 years of a deal. They're not going to do that. So you got to be strategic enough to know what the landlord's basis or cost is in a deal, how much motivation they have. And that gets into things like how much vacancy they have. Do they have any other spaces coming up for vacancy? We have other properties that are suffering or hemorrhaging because they don't have enough tenants in their properties. Like, would making this deal help secure their portfolio or other properties? Or is this landlord sitting at 100% lease? They've got a line of people that want your space if you don't take it. I mean, those are all things that you want to know. And if you're not savvy, you won't know them. There are also times in a market too where, let's say you are in like the creme de la creme property, it's the best property in the area. Well, saving the most money might not be the strategy. Like staying in the space or getting the space might be the property. I mean, I can think of markets that we do deals in where you go to market and you want to be in a certain area and there's literally one property available. And if you want it, offering $500,000 less than they're selling it for is not going to get you the property. You might have to be a lot more strategic and actually offer more than they're asking if you want to get that property. So the question is, do you want to submit an offer that gets rejected and you feel like you got to win because you quote offered a lower price, or do you want to actually find yourself getting the property? And so there's different strategies depending on the market. Conversely, you go to market and you've got 8 properties that fit your needs. Well, we can get as aggressive as you want to get at that point. And if landlords don't want to do it, they don't want to do it. But knowing when to push, knowing when to to maybe still push, but not push as hard.
Mm-hmm.
Knowing when you can ask for whatever you want to ask for under the sun because you've got more options than you can imagine. And then knowing when you only have one property, you've got to be very delicate with your communication and how you discuss things. Those are all things that lend themselves to strategy and lend themselves, again, to having a real posture.
Yeah, and I want to kind of put you on the spot here, more tongue in cheek, but how many times in your career has a doctor come to you and knew all those things, from vacancy rates to market rates to NOI, how NOI affects landlord's cap rate, all those things? How many times in your career has a doc come in knowing all of those things?
It's very, very rare. And here's what I'll tell you. The clients that we work with that do know more are the ones that rely on us even more than others do. Like the most savvy clients we have that have done 30, 40 deals themselves, they are the least likely to tell us how to do it. And they're the most likely to tell us, what are you seeing, and ask us questions and rely upon our expertise. It's really interesting. So, I think it's like this, Starbucks is the largest coffee franchise in the world, whether you like their coffee or not. It's the most successful coffee franchise in the world. They have a team of internal real estate, real estate team, and then asset managers. Then they have outside brokers in every single market. There's 2 or 3 real estate professionals on every single deal they do. Why is that the case? You look at I was talking to the owner of Hobby Lobby a few months ago at an event, and he was telling me there's like 5 people internally that all they do is handle real estate transactions, and they still use an outside broker on every single one of those deals because they know how much is in the line. So if a Fortune 100 or 500 company had internal real estate team and they still use outside brokers and they're not playing games, every deal they do, their strategy and intentionality and data, the question of why is because they know how much is in the line. So it's like a lot of things. If you want the best results, you hire the best people. You hire a great CPA, you're not doing your taxes online. You hire an architect, you're not trying to cut costs and put a draftsman. You're hiring the right people. You're not a general contractor, you hire a great contractor. We don't try to do your own marketing. You hire a great marketing firm, like all those things. You have to tell like you're an attorney, you hire a fantastic real estate attorney. It's the same thing. Just because you can do it doesn't mean that you choose to do it. You recognize what you're good at, you stay in your lane, and then you bring in people that are really qualified, that are really talented in other areas. And if you surround yourself with the best people, you're going to win. It's, again, to use another analogy, like you play quarterback, you're not a defensive end. Like just you stick with your position, you surround yourself with the best people for each position, and that's how you put together a winning team. But if you're a quarterback trying to play defensive end or wide receiver, like you're going to find yourself out of position and you're going to have a deficiency. And it will typically, in our world, it'll just simply cost you like several weeks of your life, several months of your life as far as time that you wasted. And that'll typically cost you hundreds of thousands of dollars. And it's one of those things where you just can't get it back. Once you lose that money, it is gone forever.
Yeah, that was the whole point. I was being tongue in cheek. No offense to anybody out there, because I'm sure there's some educated tenants out there. We've had that conversation before about Starbucks. I was hoping that's where that was going to go, because if it's good enough for those type companies, it should be good enough for the mom and pop dentist or the one-off dentist or those that are looking to scale. Starbucks has done a really, really good job at scaling, and they did that with both internal and external real estate agents. I think if you're looking to scale, that's a great place to start. And what a great analogy. Again, it just all goes back to hiring the people that are good at things that you either don't have experience in or don't have the time for. Because I think the 3 biggest overarching themes that I'm hearing from you, Colin, are a tenant buyer rep can save time, money, and then you have experience that you can bank on to help you make sure you're getting the correct deal.
Absolutely, 100%.
What is the average time on a real estate deal? Just from like researching to negotiating and touring, how much time does the average real estate deal take?
I would tell you it's at least 30 to 40 hours. It depends on more complex deals go beyond there. And so again, a doctor would say, well, I can do it faster. You can, but if you miss the key elements of the research and the due diligence and the information, then you're going to get it in fear as well. Like I can get a deal done in 13 seconds, just say, send me the proposal and sign it. But again, there's key elements that are missed in that process. So again, just because you can do something doesn't mean that you should. And at the end of the day, it's amazing. People will go to dramatic lengths to save certain amounts of money. Like I said, hey, I could save you $3,000 in your homeowner insurance. Like call this person. If you call them in 2 seconds, like you'd be like, yeah, of course I'm gonna try to save $3,000. Or if I said, hey, I could save you this on whatever it might be, a couple $1,000 captures people's attention real quickly. But it's amazing when you start talking about, commercial real estate, there's hundreds of thousands of dollars on the line. And it's interesting how some people just don't pick up on how much is really at play.
Yeah, what's the jingle? 15 minutes could save you 15% or more on your car insurance. Like, I mean,
Yeah,
saving money is very important to people. And I think the biggest part of that you talked about, 30 to 40 hours for a real estate deal, those hours are going to come somewhere, whether during during your daytime when you should be generating revenue and seeing patients, or is it going to be at night when you're hanging out with your family, unwinding, walking your dog? Where's those 30 or 40 hours going to come? And I can tell you, most landlords and listing agents don't work on nights and weekends. So if you're going to push that to a night or a weekend task, it's still going to bleed over into when you should be generating revenue for your practice. And so where are those 30 or 40 hours going to come from in a very busy week? Because you're obviously busy and being successful if you're looking for new property or have a lease renewal coming up.
exactly. And one more thing I want to mention, I think we've said this, but you don't lose control by hiring a professional. Like if you hire a great CPA or a great attorney, they don't sign contracts for you. They don't do things without asking your permission, but they present you with choices. They give you perspective that you didn't have. And so, sometimes people say, well, I don't want to lose control. I want to do it myself. You have more control when you hire someone because they give you more options. They create greater leverage and you have the ability to capitalize at a higher level. So when you hire someone, you have greater empowerment, not less. You have greater control of the deal, not less. And at the end of the day, a great advisor is not going to push you to do a deal. They're going to give you options. They're going to tell you what they would do if they were in your shoes. They're going to tell you what they would do, knowing their expertise and their background. But at the end of the day, you are empowered to make the best decision. And the more options you have, the stronger the decision you can make, and with more confidence. At the end of the day, nobody wants to sign a lease and then wonder, should I have looked at 3 or 4 other properties? Should we have pushed harder with this negotiation? Like that peace of mind is invaluable. Nobody wants to second guess a decision they made for the next 9.5 years, and then realize at the end of the day, I really believe this one. Like the idea that I saw the market, we looked at the top 7 or 8 properties, we negotiated on the top 3, 4, or 5 properties. We went 3 or 4 rounds of negotiations with the top 3 or 4 properties. We didn't leave any money on the table. And I said yes to this property. It was the right property. Or you know what? I chose to pay more. I chose to get less in concessions because it was worth it to me. I didn't choose the cheapest. I chose the best, but I know that I got the best terms possible for that deal. That type of information, in my opinion, is priceless. The peace of mind is truly invaluable. People spend a lot of time and a lot of money to get that peace of mind. And there's a way that you can do it without spending any money and spending hardly any time in our role, and it's called higher expert representation.
That's exactly right, man. Couldn't have said it better myself. It's a great way to kind of wrap that conversation up. And the last thing I want to ask about is I had this conversation recently with a doctor. So it does come up from time to time. You talked earlier, kind of briefly mentioned buying land and building. When is that the right move? When is that an option? And kind of talk about like what all goes into that. Cause we had to have that conversation because she was very unaware of all the steps that come with, I'm just going to buy a piece of land and build a building. And it should be like building a house, right?
Yeah, absolutely. So, buying a piece of ground and building your own building is one of the most interesting transactions you can do. It has the upside that you can get exactly what you want. You can get the exact square footage, the exact style, the exact layout, finishes, location, but it's also the most expensive transaction you can do. The cost of building your own building or facility, it will be the most it's our time consuming and the most costly transaction that you do. And so it comes with a price. If it's the only option for you to own and that's what you want to do, awesome. We've had a lot of clients that we've had specialty animal hospitals or like fertility centers or like compounding pharmacies that needed like 25,000 square feet. And there was just nothing available that fit their needs in an area and they wanted to own. In that case, it is what it is. You just realize it's going to be a more challenging transaction. It'll cost you more money. It'll take more of your time, but at the end of the day, you're going to get the most ideal outcome, like the most focused, ideal property you can get. So it just comes with more. So if you're looking for speed, you lease. If you're looking for highest concessions, you lease. Lowest cost in a deal, you lease. Lowest monthly price, you typically lease. If you're looking to build wealth in another area, you look at ownership. And if there's nothing else available besides buying ground and building your own property, then that's a whole different story. You just realize it's going to be a little more challenging, but it'll be worth it at the end of the day if you get exactly what you want, and it's the only option for you to own if you want to purchase.
Yeah, and if you are going that route, just know that you're looking at least 18 to 24 months. By the time you do your site selection, you get your site work, your dirt work, your environmental studies, your impact studies, you make sure that everything's good and zoned with the city and all the things that come in that. It's at least you're looking at probably 2 years before you're open for business.
Yeah, that's the thing. People a lot of times think like you're residential and they think, going into like a master plan community and they pick out a floor plan and, the contractor has the building or the house built in 6 months, and it's just not that. I mean, it'll take you 9 to 12 months just to get to where they would even allow you to put a shovel in the ground, and that's going fast. So it literally is an 18 to 24 month process. And so that's another thing too. A lot of times people will start the process maybe like 6 to 9 months in advance of their lease expiring, and they say, I want to own my own real estate and I want to build. And it's like, look, you're a year and a half behind the true starting line, if you will. So I think the time frame plays into it, and that's a great little plug. If it's a standard lease renewal, if it's a relocation or purchase, 12 to 18 months, you're good to go. But if you do want to buy real estate, buy land, and then build your own property, that is truly needs to be started about 24 months in advance.
Yeah, exactly. Exactly. So if there is a doctor or somebody out there looking to open their first practice, but they're unsure which direction to go, where they want to lease, where they want to buy, where they want to head in whatever direction, what is the first step or first questions they should be asking?
Yeah, I'm looking at things like, do they have the ability to purchase? Like if it's a startup and they just got out of residency, and they think that they might want twice as much square footage in a few years, I'm going to say, let's start with the lease. If they don't have the ability to get finance for a purchase, start with the lease. If they don't know if they want to be in the same place for the next 10, 15 years, start with the lease. But if they're open, if they can qualify for financing to purchase, if they do have the capital, things like that, from that perspective, I'm going to say, let's go look at all your options. Let's look at lease and purchase. Let's look at office versus retail. And then let's not guess which one would make the most sense. Like, let's just uncover it and let's get factual. If we go to market and the only option to purchase is a Class C building in a less than ideal like location, or has terrible access, or it's a functionally obsolete building with like 7-foot tall ceilings or something random like that, then we don't have to wonder, should we have purchased? The answer is there's no good options to purchase. Conversely, you go to market and the top property costs literally 2 times more than the next option. You've got to say, is it worth me paying, $16,000 a month for this location when my next best option is $8,000 a month? Like, am I going to get an extra, $96,000 to $100,000 a year worth of value out of this? And so when you go to market, you don't wonder. You say, well, I don't get big signage, but if the only big signage, big retail is next to, like, let's say like a vape shop or some use that's just not desirable, you might say, look, it's not worth like the damage to my image or brand to be next to this neighboring tenant for the big sign. I'd rather go into an office building and have a much nicer window line, much more professional setting, better parking, whatever it might be. And so again, the pros and cons of what's available versus what you want, you just figure it out quickly. You either have great options for retail or you don't. You have great options for office or you don't. You have options of purchase or you don't. And if you go to market and you look at your top properties, the market will tell you what you can choose from. And if you have the luxury of choosing, again, Class A retail, Class A office, purchase or lease, then it comes down to what you want to do, how much it costs, what we're willing to pay. And at that point, again, it's that peace of mind. But a lot of times you go to market and the market will tell you there's no great retail option for you that fits your budget, or unfortunately, there's not a good purchase opportunity in the area that you want to be. So those are the things that help you figure out, what to do or what not to do. Just go to market and look at all your options, negotiate 3 or 4 rounds on the top 3 or 4 properties, and then you won't have to wonder what you should or shouldn't have done.
Yeah, it's a great way to end it, man. That's phenomenal. And I think the first step that they should do is look down the show description below. There is a find an agent link. If you click that link, it takes you to our website. It lists all the agents around the country. We are in all 50 states. So if you're watching this and you have a transaction coming up, be a lease renewal, you're looking to lease, you're considering purchasing because you want to build some wealth, click that button and find the Carr agent in your neighborhood, because I can promise you, you're going to get quality representation. Colin has personally vetted all of the agents that are here, and he can tell you that we were in a room together just not long ago down in Orlando for our national meeting, and it's a great group of people that are invested in their success, but more importantly, your success, because they want to see you win, because we truly are, and this is a Miss America answer, Colin, but we truly are helping people who help people. And that's why we get into this business and do what we do. So make sure you click that link below. Colin, any other last words of wisdom that you want to leave us with before we get out of here?
Yeah, I mean, I'd say two things. Do the best you can with every opportunity. If it's an attorney, hire the best attorney. If it's a CPA, hire the best CPA to help you capitalize on always changing tax laws and things that come up. If it's real estate, hire the best commercial real estate agent you can. And just know that, if you have a great agent, they'll empower you, they'll give you options, they'll help you figure out what you should or shouldn't do. And it should be a really, really good process. You should look back and say, I'm so grateful and thankful that I hired this person. I could have done it without them. And if that's the way you feel afterwards, then you know that you had a good transaction.
That's exactly right. That's exactly right. Well, Colin, thank you for your time today, man. I know you're busy. You got a lot going on out there in Denver, but I appreciate you taking time with me today, educating me about this process and what that looks like from a lease and purchase to a build out standpoint. I really appreciate your time.
Thanks, Rusty. Always fun.
Yeah, man. Well, listen, that's going to do it for this episode of Coffee and Contracts. Again, if you have anything going on, reach out to a car agent, find a good tenant buyer rep in your area. And just remember, there is no one size fits all. It's okay to ask questions. There's no such thing as a stupid question except a question not asked. So make sure that you're asking the right questions, getting the most knowledge that you can. And by asking questions, to Colin's point, you'll find the best people in your area to help you get these deals done. But again, for Colin, I am Rusty. Y'all go be a friend of somebody who needs a friend. We'll see you back here next time on Coffee and Contract.